Neo, Neo. This is Morpheus, the white Caucasian Morpheus. Time to pay attention, Neo. Are the exchanges in crypto land potentially bad actors for the technology? This is the question. It's time to take a little bit of a dig and a bit of an understanding of how ICOs work, how the great game of crypto and ICOs work. Here's how it goes. When I was in New York, Consensus, there's an insider cartel collection, loose collection of people that are trying to stay close to every major project, where all the big money is and where all the big names are. This core networking hive in crypto land are needed to get your new ICO talked about, heard about, discussed. PR, unfortunately, is oxygen for an unknown entrepreneur, a new project, a new vision that needs to be heard about. Forget about the best mousetrap fallacy. It doesn't matter how awesome your mousetrap is. Nobody's going to beat their way to your door in some godforsaken forest in an outback Transylvania somewhere to buy the best mousetrap. You have to be available. You have to be heard. So what ends up happening is you, with your genius idea on an ICO, need the oxygen of awareness. You need to go to these insiders. You need them to get talking about you. You need to get them involved. You need to be able to say, so and so has taken tokens in our project. So and so has paid for tokens in our project. And what this ends up meaning is there's many funding rounds. Much like in equities, there's many funding rounds. And the cartel that is investment banking in our traditional banking system likes to be given free money for very little. So what ends up happening is they provide funding from their multitude of credit lines they have with retail banks, commercial banks, or just as an investment bank, issuing debt and trading debt all the time. And you get them involved in your project. The ICO system is very similar. How do you get them involved? You've got to basically do 1 millimeter short of throwing money at them. So you have an ICO that might launch at 10 cents. Let's talk in dollar terms rather than BTC terms to start. 10 cents, 5 cents, even 1 cent. What you actually have to do is give those core insiders, so that they say, yeah, I've got a little bit of a holding of this, a little bit of a holding of that, that they blog about you, that they talk about you. YouTubers, podcasters, close connection in the text that are advisors. Being asked to be an advisor means you get given coins, often 90%, 95% off. Remember, these tokens have been created out of nothing anyway. It's about some future value. So they go through these funding rounds where money is brought in, some of which is done, as I say, discounts, 95, 90%, then slowly 70%, 30%, then you can get 50%. You're going to get it for half the price that they'll end up doing the ICO at when the public Joe can get in. But most people end up getting included on the final list that's at 50%. Because these people need funding. So they're desperate for funding. So you have this discount range. The difference is there's many people that have all been given coins at a major discount. And they're impatient people, they get rich quick people, just like many other people that are attracted to fast moving markets. So your core people that are on board, that have allowed you to put their name as an advisor on their website, in their white paper, etc., that check in once a quarter for a 5-way Skype call from their island in the Bahamas. They want out quite early when the ICOs come because they want to rinse and repeat and flip their money into some new ICO that's already badging them that's even newer than yours. So what ends up happening is these ICOs, these companies with a dream and a vision and a real goal, let's say this is a non-spam ICO, non-scam ICO, they actually have money that they raise, a reasonable amount of money that they raise. Let's say they successfully complete these various rounds of discounting and then getting into people at ever lesser discounts, and eventually they ICO. They get a certain amount of cash that they want, that should go towards hiring developers, forwarding the objectives of the business, etc., and getting out. But what ends up often happening is the ICO immediately gets put under a lot of pressure from the early contributors. It's very close to either when it's about a list or just post its list, especially if it sells off in a market like this, where everyone's got discounts and everybody then sells at the list price and there's no damn buyers. More on this to come, by the way. And you get a lot of pressure from these early contributors and these names that have been bought, essentially, that may not be particularly committed. They're just in it for the money to a large extent. Yeah, they'll do a few calls. They'll say, yeah, I've chucked in my opinion, my advice, but at the end of the day, I want to get in and get out as quickly and as efficiently as possible, make my bucks and roll that same bankroll into the next one where I can keep getting 2x and 3x, 10x, 5x, depending on the market conditions. It's much less friendly market conditions now, of course. So these guys are getting even more demanding. And if they've paid a certain amount of money and they've got money, they've put in and they've bought real cheap, they've given you $1 million and bought a 10-cent ICO coin for a single cent. They then saying, you know, they've got $1 million worth of that, let's say. They actually have 100 million of your tokens. That's a lot of tokens that need to get out, or often want to get out. They want to lock in and get some of their rollback. So they're there to arbitrage their connection and their ability to negotiate discounts. So they all want to stay core and key and boost their name and reputation so that they're highly influenceable people and continue to be given these offers of new ICOs. Sidebar. On that note, yours truly, the crypto sniper, and this is highly dubious, I have to say, Upfolio voted 100th in the top 100 most influential crypto blockchain voices. I suspect there was too many YouTubers and podcasters in there and not enough devs. But anyway, delighted to be in there. But anyway, the people I'm talking about are far less like me. They're far more like the operators, the networkers, the guys in the consensus, the guys that have quite a bit of tech knowledge. My tech knowledge is limited, if in truth, and I learn along with the rest of you. Anyway, in order to satisfy these early flippers, the ICOs need to pay an enormous listing fee often to get onto exchanges. And the more the exchanges realize how much power and leverage, the bigger these exchange fees. There's, you know, we've heard of stories of Binance increasing their listing fee from 2 million to a whopping 6 million. You know, imagine you raise $10 million and 6 million of that goes to have a place where people can just buy and sell you, an official place where people can just buy and sell you. And there's more. Wait, there's a lot more. I would say actually an ICO that raises $10 million is hopelessly underfunded for long term, especially if you've got real rollout, developers, growth, and everything to plan. That's why we now have the mega ICOs, kind of like what EOS was, and a huge largesse of capital. I think the small ICOs of 10 million, 15 million aren't going to make it. And anyway, so to get listed on these exchanges, you could even pay up to $6 million. And then even if the project can come up with that astonishing amount, there's still no guarantee that the exchange is even going to list you. So it's quite a fascinating situation. They're almost banditos. These guys have incredible leverage to get on. That's not to say every exchange is charging that amount. And it's not to say it's that amount for every coin, but this is potentially what you're looking at. So what then happens? You would have to spend over 10% of your total raise, or over 10 cents of every contributor, just to get onto something like Binance. If you've raised the equivalent of 60 million. 10% of your roll is to get on it. And then you find out that the major exchanges say, hey, in our services and terms and conditions, you have to subscribe to certain market making bots. Now, you guys know about this if you've traded in the exchange. If you've ever had a reasonable line of coins that you put in, the minute I put in 100,000 of XY token, boom, one Satoshi in front of me jumps 35,000 coins of that exact same coin immediately as I've submitted my order. That is a bot that is front running you. In other words, there is a requirement to create the impression of liquidity in an environment where actually the liquidity often isn't there. This is one of the reasons why we talk a lot about in our crypto trading in the top 10, and most of what we do is in the top 3 or 4. There is such fake liquidity on the mid and small coins. It is all bot generated. You see there's bids at every level, and then you try to test the depth of that level, and there's nothing there. 0.1, nothing. $5, $10, $100. If you've got a 6 or 7 digit sum in there and you're playing in those markets, actually you can't get real moving. So the bots are there to create the impression of a 2-tier market, a supply stack and a demand stack. And often it's fake smoke and mirrors. In other words, any major size starts to get moved to get out, the buy bots just whittle away, or they reduce their size to a fraction so that it still shows something in the stack, but it's next to nothing, and they build the stack on the sell side. So rather than stabilizing the market, they're not going to buy a whole shed load of coins that are going to subsequently lose value. The other aspect that comes in with the market maker bots that goes hand in hand with the exchange is that the exchange itself often requires you give it a liquidity pool of your ICO coins. So the exchange has its approved bots for which it has a relationship, either runs the company itself or tries to pretend that it's keeping an arm's length distance but gets some form of affiliate commissioning for allowing those bots, or saying you may only utilize the following bots to make market for you, and gets a cut. They generate obviously trading commissions and costs as well, and they give probably a profit share for the privilege of doing so on your coin. And coins are even given to that exchange by obligation. You have to give a float of your coins, which means they, the exchange and its relationship with the bots, now have the means to short sell your coin because they have a liquidity float that has been provided on your ICO. So we're talking about you as business entrepreneur who's deciding that you want to launch this great idea, change the world, use blockchain. You hate the Fed, you're a libertarian, you've got good intentions, you want people to be free, you've got a certain angle, all these good things. This is what you will be contending with. So for example, you will have these computer lists that will have 10 buy orders, 10 sell orders on the exchange at any time. So there's a sort of minimum criteria the bots will claim to give you. Some exchanges will require 20 on each side or even more. So the job of the market maker is just to keep appearing as though there's a stack, a demand and a supply stack. That's what they're showing you when you see those triangles down the side. And the ones close to the action and the real spread, it's where the danger is, because that's where they can take losses. So those are very small in volume, both on the demand and the sell side, unless there's a clear move. And the minute there's a move where there's a sudden seller on the one side of some scale, you will watch the sub-demand side whittle away and thin down deeply, because that'll be that unsettling. And this is why we get flash crashes and this fake liquidity impression. So you've got to be really careful as to which coins you engage in. All is not what it seems. There is not great liquidity. You have to look at those two multi-level streams. So volumes are low. Spreads give the speculators of artificial comfort. You get that feeling, yeah, there's a buy. I can get in and out anytime you like. Always try. Try move 10 grand in and out and you'll see whether there's real depth. Before you put in 100 grand, it makes sense. Test the fullness of the liquidity. By the way, coin market cap, simple way to recognize what is a big coin and what is a medium tier coin and what is a small tier coin. Generally, as a golden rule, you want to be on the top end of the market caps if you're going to be moving any size. Oh, but you don't get the 5x, the 10x. That's greed. Everyone is a momentum chaser. Everyone is a momentum chaser, and this is what these bots rely on, and that is why you lose money. So there's a spike sell-off that will cause everyone to sell off, and the guys on the other side can buy it back off. You should be trading at the level, thinking trading to a level instead of momentum chasing. Just in Bitcoin alone, imagine you were a buyer every time at 5,750 to 6,000, 6,100, and a seller at 6,700, $7,000 on Bitcoin. This entire period, every time it came down to the 6 ones or below, you're net accumulating and selling, net accumulating and selling, net accumulating. You've had plunge, basing out, spike, plunge, spike. The only people that are making money are those that trade to a range price. Everyone who thinks they're a trend, has a trend following mechanism, thinks this is it, this is it, this is the sell-off, it's going to take out the new low, or this is it, it's breaking up, we're going to move to the moon back into a major bull stage, buy, buy, buy. And they keep buying as you take out new highs, and they keep selling as you take out new lows or approach new lows near the low. When in actual fact, the people that have made any form of money, and that's very few retail crypto traders in the current market condition, are those that are trading to a level, and that is typical of what robots will do. And they can orchestrate spikes and plunges on this fake liquidity and depth. So what you end up having as Mr. ICOs, you have your coin plunged and spiked quite regularly by people that actually have a reasonable percentage of your role as part of giving you the privilege of being on the exchange. Then they have bots. What ends up happening is the retail guys that bought your coin are being shaken in and out at the lows and the highs and are consistently getting losses. So you might think as the ICO guy, well, they should hodl. You know, they should be investors. They should be in it for the tech. But that's naive. People aren't entirely in it for the tech. There's never 100% only in it for the tech. Only people that have no idea and no method will then say, what the hell, I'll just stand too. And of course, in a bear market where Bitcoin lost 70% and many ICOs lost 95 to 99%, that's proven fatal. But many will do that out of inertia, lack of mechanism, lack of investment savvy, because they are new to the investing realm. So your clients and people that bought into your pitch are now losing immensely. So these market makers aren't even free, and it's typical. You have to pay the market makers as well as the exchange consistently for your listing. So naturally those services can be quite expensive, and the exchange are ready to introduce you to their nominated partners, let's put it, to have you in that. And not only that, but there's a third fee that will apply, and that's your minimum deposit of up to millions of your tokens from the ICO in that very float that I've already described. A liquidity deposit or charge, which they will be continually ebbing and flowing and providing to the bot to dip and pump to create. Remember, the exchange objective is to get wealthy. Binance has done far better during this period as an exchange than most of the tokens on its exchange. They're talking about having $1 billion in profits, and their goals are to make fees. Their goals are to make fees, charging you and your ICO, making money off your clients, not just on the exchange fees, but shaking them out at lows with orchestrated plunges and rallied highs. So this is where you get the notion of people that are talking about the bar pattern and things like that, that just seem plunge, base, spike, plunge, base, and all of this. By the way, there's no such thing in technical analysis. It was originally put forward in humor, so I wouldn't dying out on trying to sound smart about calling the Bart pattern, but you have the justifications of how these things come about through the nature in which these things are structured. And it's a concern for liquidity. It should be a concern for your liquidity and monkey business of orchestrating in a sideways market that has lost clear trend, not supremely bearish anymore, although potentially, but not selling off anymore, say like Bitcoin, but not ready, too many burned hands to be bullish, not this wall of new capital ready to come in. And what do you get in this churn? The guys trading to the level make the money, and the retail traders who chase pumps and dumps getting skinned because you're getting ranges, panics, and it's natural. Everybody is like a dog. The retail trader is like a dog that chases cars. The minute the car stops, the dog is vexed and doesn't know what to do. He only wants to chase things that are running, whether it's south side or downside. And the sooner you learn method, the sooner you get away from wanting in something that's already doing what you hoped it would do, and recognizing it's too late by the time you want to chase. This is FOMO, and that is your psychological, mental-based amygdala response of fear of losing out and that you are not responding rationally. The sooner you will stop giving your money to the exchanges, the bots that run them, and rewarding what are in fact the banditos. And then some will say, oh, we should get, yeah, this is right, this is true, we should get regulated. No, we don't want government. We don't want regulation. Get wise instead, Neo. This is Morpheus here, giving you the flipping script. The government ain't there to help you. They're just there to help join the scam and help rip off and add their own extraction fees and create some regulating body with fancy salaries and bobs and create legalese and control and want identities and all of that and all the original reasons that made crypto great. This is the Wild West, and learn to be safe in the Wild West. That means you carry a 6-shooter and a rifle with you. And if something doesn't say its name before approaching you, you shoot. And you're wise, and you know what to be aware of. You know where the bears are, you know what they look like, you know where the red Indians are, and you stay well clear. In other words, you need to get wise. Don't get regulated. Wrong message. Don't panic into government. Government's not your friend. He's not the nanny that's going to fix your problems. He's going to become a new link in the chain in milking the marks, and you're the mark. You're ever at the poker table and you're wondering who the goddamn patsy is, you can be damn sure it's you. Forget about looking around, they're all laughing and looking at you. And that's how it is in the crypto exchange game. You need to be wary of this. So here you've got exchanges and ICO'S coins, a market maker, an army of speculators that lay in wait for just the right moment to front run your orders every time you want to get out. So there's always someone jumping in your way. The minute you're going to move anything significant in volume, they want to get out in front of you because they know you're going to knock on the market effect, because they know half the buy stack is all fake and small numbers and will vanish the minute you start leaning on that side of the equation. So they jump in front of you. This is Flash Crash. This is Michael Lewis's book on the HFTC trading all over again. Only you're getting it done by a bot, and you're getting fleeced by the same tricks that happens in the stock markets and all the other aspects of the game. That's why people that get so moralistic, so, oh, it's all about the tech and it's all about the freedom and it's all about the liberty, don't realize that you get a rinse and repeat formula of rental and tertiary extraction in banking and in a trading environment, front running, high frequency, all of the same bot algorithms that are stealing from you, getting just in front of you and get just out. And this is how it's rolling in here. And a lot of that trading volume and movements just before you buy, they always seem to have the perfect timing to many of the people. And a lot of that's got to do with the pool. If you hold the coins and you can orchestrate a flash dump, you can often be very well timed for selling it short. And they have all the resources and all the inside of what's the true volume depth, and where there are true holes, and where actually a very small sell-off can orchestrate a substantial flash crash because there's insufficient bid. You got to remember now, crypto is light volume. compared to equities, which is light volume compared to the bond and debt markets, which is light compared to FX markets. So there are, and then you add to that, it's a 24/7. Note the 7. It's not even like FX 24/7 Monday through Friday. It's 24/5. This is 24/7. Why so many dumps on the weekend? I don't know, because the guys that are trading during the week aren't trading on the weekend. The guys that are trading on the weekend maybe can't buy the time to trade during the week. Who knows? But you can see sinkholes in your true volume tree, even if you've put bots in between there to hide that fact. You know that's all you and your goddamn bots. Flash crash, sell-offs on the low markets. I've seen it done on the pound, on Japanese time frame, when the Japanese market's open and the British market's not even open. If they can do that on FX, you're telling me that's not going down on this skinny little market of ours in cryptos? You're kidding me. You've got to wise up, Neo. Wise up, Neo. Get the script. This is what's happening. So Binance is going to make $1 billion this year. That's great for Binance. That money doesn't appear out of thin air. You know, it's been collected from ICO'S in sky-high fees, front running quite possibly, trading in front with the help of bots that sort of keep it arm length away from Binance itself. Binance don't want to be you're skinning and scalping your own clients. So they'll have separate organization, affiliate agreements, who knows. This is not a specific dig on this exchange, by the way. They're all the same. But as I mentioned, Binance's coin and Binance's profit has done a whole bunch better than those happening to trade on Binance throughout this period. In fact, since February of this year, I would imagine most crypto traders have lost on balance, if they're in BTC, 70% of their money. Many have lost 90 to 95% of the money. Some have done an entire blowout. In that time, Binance is mooning. And other exchanges have done well, but you know, they're one that comes to mind for a lot of people. The other thing that happens a lot for me as a podcaster, more as a YouTuber than a podcaster, is the minute a coin needs a bit of hype, there's bots, not just for the liquidity on the buy and ask. I get 15, 20 different bots spamming every time I have a release on my Crypto Sniper coin. ICO token, this, bloody, you name it. They're just spamming, often with Russian created profiles or with hot girl picture to appeal to what is predominantly a male industry. Wish there were more women. Good luck to all the ladies, but this is designed to appeal to the greed of everyone. 500x, 100x this on this ICO, boom, 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 report. I can report those same profiles on YouTube every single time, which I do, and they will continue to spam my YouTube channel for a long, long time before the control structure, Google, YouTube crowd actually get around to removing these guys. And they sell complete greed. They want your $100, your $500 for all the guys that says, what the hell, I'll chuck 500, 1,000. It's not the end of the world if I lose. They need a lot. They need 1 in 100 people that see that to do that and put $1,000 in it, and they slowly collecting their 6 million. It's like paying a tax. You're buying something that you have no idea because someone's gone out and promised you the greediest of greed message on the basis of every now and then it happens. A penny stock turns into Google. No, they generally don't. No, they generally don't. I can assure you they generally don't. You know, one of my favorite quotes that I teach is that, you know, 1 in 4 people will have an accident while either talking on their phone, texting on their phone, or paying divided attention to their driving due to their smart device. And the guys will read that and go, yep, it does happen, but not me. And then you'll have the Powerball lottery, 1 in 263 million chance of winning, and they'll go, well, somebody's got to win it. You're in it. If you're in it, you got a chance. It never ceases to amaze me, and that's human psychology. It's never you that could bump into someone because you just glance down at your alert on your device sitting on the chair next door or charging in your driver's console. but it's always you that's in it. You know, you could be the one to win the Powerball to a 1 in 263 million. Somebody does, you know. So this is the key thing. So one of the messages that I'm saying here, it's a Wild West, and that's okay. We don't want government in. It just changes the nature of the Wild West and spoils the game. You've got to wise up. You've got to wise up to how the whole operation runs. You've got to wise up to the whole operation runs. And remember, slow dough is better than fast dough. Fast dough is lost fast. Slow dough is earned. Fast dough is speculated in and is speculated back out super quick. Make the slow dough. The slow dough you can make in the top 10 coins is still pretty spectacular. You can get in, you can get out. There is real potential that there's legit volume on both the buy and the ask spreads. Not to say all these issues I've described doesn't happen, aka flash crashes, BART patterns on BTC, etc., but recognize when you're not in a trend and stop playing trend following strategies. When you're in an interim period, trade to the level, buy at the value points where there's proven support until such time as it fails. It's interesting to note that the 100 billion market cap for BTC regularly seems to be defended at around 5.7 to 6.1. BTC till now happens to prove support. That's not to say that can't change and it can't fall through it. But recognize what's going down. How many times have you chased in on a pump only to lock in a loss on a dump later? How many times have you chased in short on a sell-off only to lock in a loss on a later pump? You're being shaken around. You're in a washing machine being tumbled from top to bottom in a range the diameter of your drum. Stop wasting your money. At the moment, is not a clear-cut trending market. Beware of how the system operates. Understand that these ICOs have to pay a variety of actors, supposedly to create the impression for you that there is a bid and ask spread, because to see voids, and I understand it, to see complete voids, it's probably better that the bot is there, but it's a false comfort until you've tested that depth. So why are you getting into the small coins? Because you're going to win the Powerball for 1 in 263 million? I saw a top 10 in 2013. Bitcoin aside, nearly every single one of those coins are out in number 300 in coin market cap and largely decimated. Most are going to lose, especially in the small and the medium small tier. Even the medium tier level is exceedingly weak. Understand the games. Understand that the exchanges are facilitators and in it for themselves, as capitalism dictates, and they want to generate fees, and that they have a float of every single coin for themselves, and the bots will probably have access to that float themselves and will be range